G'day traders, Stacey Burke from Stacey Burke Trading. Just continuing our discussion about trading the fast moves off consolidations and stop hunts. So we talked about a number of things. We talked about the 3-hour window of the high and low being established and whether or not that next 3-hour window goes into consolidation or extends the range, because that can tell us a lot about how the market is setting up. Now we're going to go just day by day over 3 or 4 pairs and just look for, again, our 50 pips of movement and then our consolidation. So the second 3-hour window of the market, 1 push, 2 push, 3 pushes, but it also stop hunts the traders that are short and then stop hunts the low of the day. So this market has gone 50 pips, gone into consolidation, and the assumption may be that they're going to continue that move. They've come off of numbers, but they've done one large candle to the low of the day as we head into the Europe-London Open, and then they go 1, 2, 3. 1, 2, 3 typically is a stop hunt. 1, 2, 3, and then 1, 2, 3 down, but they haven't taken out the low of the day. They go sideways 3 candles and then hit the new high of the day. Again, remember, we possibly have a stop hunt that's already occurred north. The market has moved 50 pips down. The market is possibly telling us that it's going to continue that move, except the first move didn't go any further. But it's at numbers. Some traders would have been trapped into trying to take this as a long. They tried again. They would have had to be at break even by the time the market got to the new high. It reverses on the next candle and does a 3-bar engulfment. Traders may have shorted it up here, but when the market then hits the new low of the day, they would have to go to break even again. That's the most riskiest place. Well, that's where ideally you would want to be covering the trade, taking profits, or going to break even. The market has now painted a London high and a London low. This is extending the range now. So we've had almost 50 pips of movement again, and 1 push, 2 push, engulfing the high, 3 pushes at the US Open for a 50 pip move down. Okay, so just coming back to what we talked about initially, the market moved actually 100 pips. It moved 100 pips, but 50 in our Asian session minimum, went into consolidation. We talk about the 3 things that markets do. They break out, they fill more orders, and they continue. So this is an example now. If we step back and look at the whole day, we see a move down and then 1 push, 2 pushes, 3 pushes into the US Open for a 50 pip follow through. Now that's also 3 50 pip boxes, which we would term 3 levels of drop. Now what we're talking about today specifically is consolidations build up strong moves, whether they're reversals, stop hunts, or continuations. And typically, to me, if a market moves, it moves. How it moves or why it moves is, beyond me. It doesn't matter. I want to know that it's going to move, and I want to know that I have a specific setup. Now, the initial move to the low of the day, if you were not in this original trade, then if you would not take a trade at the low of the day. But this pattern of 50 pips and then a consolidation heading into the Asian close is an ideal setup. If that was a smaller bar that just slightly engulfed this bull candle, which we'll see some other examples of today, that would have been possibly a nice trade for a continuation down to the double zeros or possibly even through to the next 50. But we broke into the double zero box on a 50 pip move, consolidated inside that second 3-hour window. But overall the session, we ended up doing London, 1 push, 2 push, 3 pushes into the US Open for a continuation. So 50 pips, consolidation, a 1, 2, 3, and then a reversal for the move down. The market moves 50 pips right off the bat in the rollover, pulls back. We're inside of a double zero box. It moves up to the high again in a 1, 2, 3. takes out the initial high of the day. This is a stop hunt on traders that were short from the previous session. Gives us a weak follow through. Goes into consolidation after a 50 pip continuation, consolidation, drops down, and we get an engulfment at the high of the day, off the high of the day, for a 50 pip move back down through the low. Again, there's our one subtle version of a 3 push pattern that's a micro double top with consolidation at the high of the day and a reversal. Breakout, pullback, breakout, false break reversal. Traders that weren't in the Asian session had a bias heading into the Europe-London Open. We had a bear pin hammer, so I had a trader ask, what's the difference between a pin bar and a pin hammer? Well, this is a pin bar. Long pin. This is a pin bar. Long pin. Okay. This is a smaller pin bar, but also would be considered a pin hammer. And this is a pin hammer. This is a pin hammer. Basically a normal size candle that is 50% pin or more. These are, 30, 40, sometimes 50 pips long, these candles. Actually, this one's probably 50 pips. Yeah, it's 50 pips. 50 pips. So large pins, pin bars. This is a pin bar. Again, keeping things simple. We want to see a pin hammer coming off of numbers or off a consolidation. After an engulfment, you'll see them often as a very powerful signal on a second side of a W or an M pattern. You'll see a pin hammer after an engulfment. That is a very strong example for a fast move about to happen. We head into the next day's session. And there's another example of where a market, and actually the previous day as well, the market has gone into consolidation, but not really off, the low of the day is painted and it's gone sideways and it's reversed. This next day, the market has gone down to a low and gone into consolidation, but it's not really had a big pullback off the low of the day. So again, possibly another sign of weakness. We head into the Asian session. The market from high to low drops 50 pips. We head into the next 3-hour window. It drops into the next 00 box. So not really any, we had a mini consolidation, 3-bar consolidation before continuing that trend, the existing trend that's in place. And then it goes 1, 2, 3 and pulls back to the numbers. 2-bar consolidation, drops down as we head into the Europe Open, continues to drop down. So again, traders who are, taking these little pin bars and in the middle of a move to counter trend, you're going to get smashed. This is not what you want to be doing. You want to look for these after a 50 to 100 pip blow off move, and it usually will be a 2-bar reversal minimum. So again, this market drops down 50 pips, goes into consolidation. So again, we aren't just looking for to get in at the numbers because it's in consolidation. We want to know a specific trade setup. And again, this exact same scenario just showed up yesterday on the pound Swiss. Move down and then 1-bar stop hunt, consolidation inside bar, and then engulfment for a continuation down into the lower box. So consolidation, 1, 2, 3 stop hunt, heading into the New York session. We get another sideways, still sideways at 50. A 1, 2, 3 consolidation, engulfment back with the existing trend at the numbers in the 12 candle window. So again, traders will say, well, why wasn't there anything in London? Well, the trade had happened up here. So this is an example where this particular pair may not have given you an ideal setup inside of your 12 candle window. Some traders might have took this long and got stopped out, but you're trading against the trend. That is not a stop hunt. That is a trend. And the other scenario I want you to consider is that we're not looking to try and trade one pair every single day. That's why we have 6 pairs. On this particular day, there was at least 1 or 2 others that would have had a perfect textbook setup. So again, we get our 50 pips in the US. Low of the day, you're 40 to 50 pips. If you didn't take it at the low of the day, you probably would have got it on the rollover. But again, the market moved 50 pips, went into consolidation, broke down into the lower 100 pip box. So we have a breakout, a pullback, and a continuation of the trend. Okay, breakout, pullback, continuation. Breakout, pullback, continuation. Breakout, pullback, range-bound market. Next day, the market moves 50 pips from high to low, going into Asia. In the next 3-hour window, they extend the Asian range and work the low of the day. We've talked about this trade last week. 1 push, pullback. 2 pushes. They're pushing into the low of the day. 3 pushes at the market timings. Okay? 1 push, 2 push, 3 pushes, London open, breakout, pullback, continuation. If you weren't long off the bottom somewhere, you're long on the continuation in the next 50 pip box on an open drive. Okay? Breaking out of the high of the day, you're inside of the previous day's US session. Breakout, pullback, continuation again. 1 push, 2 push, 3 pushes, continuing the move. So the market moved 100 pips from the beginning of Europe, went into consolidation. Again, traders trying to short against a very strong move off the low of the week. Again, off of a major consolidation pattern. This is 3 levels of drop. This market has a huge, study this pattern, this market has a huge amount of steam to blow off. The previous day had been in consolidation, but we'll stick with our 50 pips of movement. Consolidation, continuation off the double zeros, 100 pips. Consolidation, 1 push, 2 push, continuation, breakout, and again, continuing that. Our primary premise though is about 50 pips of movement. So Asia moves 50 pips, and in the next 3-hour window, pulls back off the numbers, but extends the high into the Europe Open. They break into the upper 50 pip box, 1, 2, doji, 3, 4, back inside for a 50 pip continuation. So we have our consolidation with the trend at numbers, and a 1, 2, 3 reversal. They work the high, pull back and go into consolidation. Again, trapping traders in that next 3-hour window, chasing the trend before rolling over and reversing. Consolidation, stop hunting the low of the day, or the low of London. Pin bar hammer. So again, there's an example of a pin bar. 50 pips. Okay, after a 1 push, 2 push, 3 push pattern against a very, very strong move in our 12 candle window for a 50 pip stop hunt to the high. Now they don't quite get there in the 1, 2, 3, but again, traders on a Friday night, if they haven't gotten out somewhere near the high, if they held on to that over the weekend, which I don't recommend, they got their profit targets on a 1 push, 2 push, 3 push, 50 pip move at the beginning of the Asian session on Monday before consolidation, reversal, engulfment back inside of the high of Friday, 50 pips down in that extended 3-hour window, and then 1, 2, 3, stop hunt, pull back, 1 push, 2 push, 3 pushes into the Europe-London Open. That's a 50 pip consolidation, 1 push, 2 push, 3 pushes against a strong move down off the high of the week after a 1, 2, 3 push pattern. Consolidation, pin hammer at the second candle of London. Okay, again, pin hammer versus a pin bar. Okay, this is a 50 pip pin bar. Okay, this is a pin hammer after an engulfment, 2-bar reversal pattern for a 100 pip move down. Okay, there's a big difference between this scenario and this scenario. Okay, so here's an example of what I consider to be a almost textbook perfect setup. The market initially in the rollover moved in the rollover to the Asian Open to the high of the day, which is also Monday, so high of the week. It was high of the previous week. This is an example of a breakout pullback, false break, reversal. They drop the market 50 pips and then extend the low out in that second, third hour window before working 1, 2, 3 back up to the numbers. 1 push, 2 push, 3 pushes into the down move. Okay, so the first thing that I want you to think about is, okay, there's stops sitting at the low of the day. They push it back in the third time and then engulf it off the numbers for the 50 plus move pip down. This is a textbook trading setup. Now, just as it happens, I want you to also count 1 push, 2 push, 3 pushes into the New York Open for the reversal up. And then we get 1 push, 2 push, 3 pushes into the U.S. session, heading into the U.S. session close for a 50 pip move down. But again, 1 push, 2 push, 3 pushes. 1 push, 2 push, 3 pushes. So if you think in simple terms, that's 2 to 3 hours minimum setting this up. 1 push, 2 push, 3 pushes blow off, but it's also 1 push, 2 push, 3 pushes against the 50 pip movement down at the numbers. The pound Aussie was a similar textbook setup. High of the week, 1 push, 2 push, 3 pushes and reversing, dropping the 50 pips down to the inside of the 00 box, down to the midway level, before 1 push, 2 push, 3 pushes back up, pin hammer, almost 100 pips down. If they held on to it, it was well in excess of 100 pips. But again, 3 pushes against a strong move. 1 hour, 2 hours, 3 hours almost for the 50 pip plus move down. Looking at the pound yen last Friday, okay, the market in the rollover dropped down before moving back up to the numbers, the Asian Open, dropping 50 pips, then going into consolidation again, identifying where stops are sitting. The end of Asia, 1, 2, 3 down, they hit the low, pull it back to the numbers into the Europe London Open, sideways, 3-bar engulfment continuation for 50 pips, pull back, 50 pips, consolidation, continuation. 1, 2, 3, third bar, 4-bar engulfment, 50 pips down. Now traders, just again an example of, even if there's a 2-bar reversal, okay, there's an example of a pin hammer, okay, after a 2-bar reversal, off the bottom, off numbers, pin hammer, okay, pin hammer, 50 pips back up, 4-bar consolidation, 1, 2, 3, 4, pins flip to the top side, pins on the bottom, pins on the top, at numbers at the end of our 12 candle window for 50 pips down. Okay, 50 pips, consolidation, pin hammer in the other direction. 50 pips down, 1, 2, 3, doji sideways, pin hammer back with the trend at the midpoint, which is in this case just at the quarter level at 25. But if we go back and look at a different example, so we have a market that's gone into consolidation in the Asian range, extended that to the high. Now again, if we go back and look, we'll see this was a breakout pullback in the US session rollover, but they worked back up 50 pips. Not quite 50 pips, but from the low of the previous session. 1, 2, 3, back to the high, engulfment for a 100 pip move down. Now traders, I want you to understand that this was at the low of the week. If we scrunch this chart up, okay, this was the low of a 2-week bottom, okay? So when a pin hammer produces after a 50 to 100 pip stop hunt, bring it up here, sorry, 100 pip stop hunt at the low of the week into the session open at round numbers. But even in this consolidation, we have 4 bars before it reverses. Okay, very rarely will you see a 1-2 reversal unless it's on a big blow off. So we get the reversal, they go sideways, and here's an example of a 1 push, 2 push, 3 pushes at the low of the day for a reversal. So we're not at numbers, but we're at the low. Okay, they hit it. Hit it a second time. Hit it a third time. And then reverse. And what do we see beside that reversal? A pin hammer. Pin hammer. Okay? Big difference from a pin bar. Often you'll see these pin bars in the rollover. I don't really count them as overly significant, especially when they're inside of the trend. They're usually just a stop hunt mechanism that the smart money uses. But again, 50 pips, and then we have a consolidation that works back against the trend. 1 push, 2 push, 3 pushes down, not quite at numbers. That's the sign of a strong trend. It breaks back long again and blows off through the high. Very important. Okay, here's an example of a range-bound market. The market continued to trend down into the Asian Open. So they've moved it not quite 50 pips, but obviously there's been more than 50 pips of movement from the US session. The market pulls back, goes down to the low of the day, hits the high of the day, hits the low of the day again, pulls back 1, 2, 3 sideways, stop hunt to the low. I talked about this pattern showing up on the pound Aussie in the previous example. 1, 2, 3 back against the trend, stop hunt. So this 1, 2, 3 only went 50% of the way before 1, 2, 3, 4 down to the low. Again, there's an example of a doji and a 1, 2, 3 pin hammer at the bottom. Okay, before it reverses back up. Now this is an example of a market breaking out, pulling back, and going into a range-bound market. Okay, made new lows, made new highs, but for the most part it went sideways for the bulk of that session. Now it's possible that this market is either going to layer on top for a continuation back long, or drop down and roll over for a measured move back through the low of Monday, which again, we've extended the range in the Asian session, so not quite 50 pips, but almost, and it's possible we may get there. But currently, possibly heading into consolidation, which would be at the high of the day as we head into the Europe-London Open. But Friday's trade is a great example again of a market moving 100 pips, going into consolidation before dropping down into the lower 50 pip box, consolidating but dropping lower, 1 bar pullback sideways, pin hammer at the close of Asia, dropping down to the 00. So we've had 50 pips of movement, consolidation, dropping down, pulling back, breakout, pullback sideways, pin hammer at numbers with the trend for the continuation short. So hopefully you got some value from today's video, traders. Look for 50 pips of movement. You want to be at the high or low of the day. If we get that 50 pips, does the next 3-hour window extend out? And if it does it go into consolidation at numbers or at the high or low of the day? And do you get a pin hammer or a 2-bar engulfment, 3-bar engulfment, a W, an M pattern, whatever that may be? 1 push, 2 push, 3 pushes, pin hammer, 50 pips. So look for that 50 pips in consolidation. The bigger the consolidation after a big move with pins on one side, typically will give you an example, especially if they're extending in the direction of the original drive. They will potentially be building up for a big move in the opposite direction. Keep it simple, traders. Stay disciplined, stay focused. Look for the consolidations. You'll find that there are large, fast moves that come out of there. Have a great trading day, and may the markets go with you.
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High-Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.